Another day, another story. Welcome back to Forum Finanzia, your go-to channel for all things personal finance. Today, we're diving into a hot topic. Should you buy a home now or wait? It's a decision that can significantly impact your financial future. In this video, we'll explore the key factors to consider when making this important choice. First, our opinion. While the decision to buy a home is highly personal and depends on individual circumstances, we firmly believe that if you're financially ready, now is an excellent time to purchase a house. Right now, the cost of borrowing money for a home is a bit high, and it might stay that way if Bank of Canada decides to raise rates again, or even keep them at current levels. But here's the deal. Home prices keep going up, like they always do. So, if you buy now, you'll lock in the price before it gets even higher. And if interest rates drop in the future, you can refinance to get a better rate. Another perk is that not as many people are buying homes right now because of those high interest rates. That means less competition when you're trying to buy. But, and this is important, only buy a house if you've got your money situation in good shape. Are you financially prepared to purchase a home? Before we get into the timing of your home purchase, it's crucial to assess your financial readiness. Here are some financial factors to consider. 1. Do you have an emergency fund saved? An emergency fund is your safety net in unexpected situations like job loss, medical emergencies, or major home repairs. Before buying a home, it's advisable to have an emergency fund that can cover at least 3 to 6 months' worth of living expenses. 2. Do you have a strong down payment and closing costs saved? Saving for a down payment is the hardest part of buying a home for most. The down payment amount varies depending on the type of mortgage and lender requirements, but typically ranges from 5% to 20% of the home's purchase price. Additionally, you'll need to cover closing costs, which can include fees for inspections, appraisals, and legal services. 3. Can you afford the house payments? Calculate your budget to determine whether you can comfortably afford the monthly house payments. Your mortgage payments, including property taxes, allowance for heat and maintenance costs if a condominium should ideally be no more than 39% of your gross monthly income. Consider other ongoing homeownership costs like homeowners insurance and maintenance expenses. Should you buy a home now or wait? The decision to buy a home now or wait is influenced by various factors, and it's essential to weigh the pros and cons carefully. Here are some things to consider. 1. Current real estate market conditions. In a seller's market, housing inventory is low, and prices are high due to high demand. In contrast, a buyer's market features more inventory and potentially lower prices. Research the local market conditions in your area to determine the current trends. Currently, market conditions are in the favor of buyers. With relatively fewer buyers competing for a growing supply of homes, this should put downwards pressure on Canadian home prices in general, but not necessarily specific to all locations. So, you must know what is happening in your specific area. 2. Mortgage interest rates. Mortgage interest rates play a crucial role in your decision-making process. The possibility of the Bank of Canada halting its rate hikes, a scenario widely anticipated as inflation stabilizes and the risk of a recession grows, could even result in interest rate cuts this year. The Bank of Canada predicts that it won't see a consistent 2% inflation rate until sometime in 2024. But yet the spending spree we are on continues. So that target may or may not be a little optimistic. The bank rate is currently significantly higher than what's considered a neutral range, typically falling between 2% and 3%. If inflation is controlled, and there's no economic recession, the rate will likely return to this neutral range. Even in the event of a recession, it might decrease further, but it's unlikely that we'll witness extremely low interest rates similar to those during the pandemic in our lifetime. 3. Your personal financial situation. Assess your current financial situation, including your credit score and debt-to-income ratio. A strong financial profile can help you secure a more favorable mortgage rate and terms. If you have a stable job and a good credit history, it might be a favorable time to buy. However, if your financial situation is less stable, it may be wise to wait and improve your financial standing. 4. Long-term versus short-term goals. Consider your long-term and short-term goals. Are you planning to stay in the area for the foreseeable future, or is this a temporary move? Conversely, if you anticipate relocating in the next few years, renting might be a more flexible option. 5. The potential for future market changes. While no one can predict the future with certainty, it's worth considering whether there are any imminent changes in the market that could impact your decision. For example, are there plans for new developments, infrastructure projects, or changes in government policies that could affect housing prices in your area? Will mortgage rates be going down in 2024? So, will mortgage rates drop in 2024? Well, it depends on who you ask, and it's all about what the Bank of Canada decides to do with interest rates. But predicting their moves is pretty tricky. Even if mortgage rates do go down in 2024, it won't be a big drop. Don't expect rates to suddenly return to the super low levels we had at the end of 2021. This simply means that although we may see some relief, it won't be as life-altering on the way down as it was on the way up. In plain terms, waiting around for a drop in rates might not be worth it compared to what you may be losing by not being in the market. What is the Bank of Canada? The Bank of Canada is the central bank of Canada, responsible for several important functions, including setting monetary policy, issuing currency, managing foreign exchange reserves, promoting a safe and efficient financial system. Why does the Bank of Canada keep raising rates? The Bank of Canada adjusts its policy interest rate to achieve its primary goal of controlling inflation. When inflation is too low, the bank may lower interest rates to stimulate spending and borrowing. Conversely, when inflation is too high, the bank may raise interest rates to cool down the economy and reduce spending. Recently, the Bank of Canada has been raising interest rates in response to rising inflationary pressures. This can have direct implications for mortgages and homebuyers. Impact on mortgage rates. When the Bank of Canada raises its policy interest rate, it becomes more expensive for banks to borrow money. In turn, banks may pass on some of these increased costs to consumers by raising the interest rates on various types of loans, including mortgages. If you're considering buying a home when the Bank of Canada is raising rates, it's essential to be prepared for the potential increase in mortgage rates. Higher mortgage rates can lead to higher monthly payments, which may affect your ability to afford a home or influence your decision on when to buy. Always, factor in potential rate increase in your home buying decisions. Key takeaways. 1. Assess your financial readiness before diving into homeownership. Ensure you have an emergency fund, a strong down payment, and can comfortably manage house payments. 2. Consider the current real estate market conditions, mortgage interest rates, and your personal financial situation when making your decision. 3. Stay informed about potential market changes and consult with experts for insights into future mortgage rates. 4. Understand how Bank of Canada interest rate increases can affect mortgage rates and your ability to purchase a home. 5. Make a decision that aligns with your long-term goals and financial stability. In the end, it's not about waiting for the perfect time. It's about being ready for the right time for you. If you're financially prepared, seize the moment and make your dream of owning a home a reality. Thank you for joining us on Forum Finanzia today. If you found this video helpful, don't forget to like and subscribe for more personal finance insights. We'll see you next time. Thanks for watching.